This video is 9 months in the making. Let's find out what the best performing and worst performing YieldMax ETFs are because I bought them. Yes, that's right. I split $1,000 between 10 different weekly and monthly paying YieldMax ETFs, and we're going to look at the performance. Now, before we get too far into it, don't forget if you're interested in ETFs, in income, you're in the right place. So like the video and subscribe. Helps me know what videos you guys like, and then I'll keep making more. But first, we'll roll that intro. Now, you may be asking yourself, why would he spend $1,000 on these high-risk income ETFs? Well, I wanted to see if they were too good to be true and if they really made money. So for those results, we're going to see it all on my dividend tracking spreadsheet. It's going to showcase the total dividends paid out, the NAV erosion, and our best total performers, which is the most important metric in my opinion. Now, we're going to look at our chart here, but I do want to showcase the funds that are in this account first. We have Coney, which was one of the original. Coney and TSLY were the two first YieldMax ETFs that paid out monthly. Loved them at the beginning. They were crazy and they were very, very new. But we have Coney, which is the Coinbase fund, TSLY, which is the Tesla fund. We have YMAG and YMAX, a pair of weekly payers. These are their sort of fund of funds. We have AMZY, the Amazon fund, NVDY, NVIDIA fund. We have MSTY, the MSTR fund, XYZY, this is Block. Not Blocks, the weekly payer, BLOCK, I think it's Square, something like that. I don't know. They rebranded, something like that. PLTY, the PLTR fund, and ULTY, another, not a fund of funds with YieldMax, but a unique fund that focuses on insane volatility underlying stocks, which I've talked about quite a bit on the channel for those that are interested. Now let's see how the performance has been. We are up 16.27% year to date. This is impressive. I'm happy with that. We're up $157, but there's a lot that weighs into that exact number because we have a lot of good performers and we have a couple really bad performers that have pulled this number way down. Not only do some of these stocks not pay a high yield, they also just drop in price consistently. The NAV erosion is all over the place and the dividends don't make up for it, whether it be because of the implied volatility being low or the overall popularity of these funds being low. I'm not sure which it is, but they just are not doing it for me. And then we have some that are absolutely performing really, really well, which I'm happy about, and we will discuss. So I want to showcase first, some of these funds did really poorly at the beginning of the year and then have done well recently. One in particular, TSLY, the Tesla fund, because Tesla has gone on another run. And so it really does change episode to episode, which is the really fun part about this experiment, but you really have to time it with these ETFs. And like I said, they are higher risk, so we have to remember that. What we're going to do now is we're going to dive into each individual chart, give a quick glance, and see how the performance has been just for the net asset value, or NAV. I'll be honest, a lot of these funds have not had a good year whatsoever. And one thing that's important to note is the size of these funds can vary drastically, right? We have some funds that are 1 billion, 1.3 billion. Then we have some that are as low as 400 million, 1 billion, almost 2 billion, 300 million, 4 billion, 3.4 billion, and so on and so forth. So they do have a wide range of overall AUM, assets under management. Now, the dividends aside, how are these things performing? And I know what you're going to say. It doesn't matter. You have to include dividends because they're dividend funds. If you don't include them, it's misleading. And that is true. We're going to look at the total return on our tracking spreadsheet, but I wanted to show you guys the overall net asset value performance of these funds. And one of them is even in the green, which is wild to think about. And that again is not including the dividends. So Coney, I mean, look at this chart. I guess you can tell which one's in the green. MSTY was in the green at one point very nicely, and since then has fallen. And you know what? I said one was in the green, and it looks like PLTY is technically in the green. But let's look. Coney's down 49%. TSLY down 34%. YMAG down 19%. YMAX down 28%, which really surprised me. I always thought YMAX would outperform YMAG. Hasn't been the case. NVDY is down almost 31%. AMZY is down 27.5%. MSTY is down 44%. ULTY is down 48%, but we saw that strategy change in ULTY, right? So it was trading at what? I can't even remember, like $20 initially. Went through a bunch of changes after it fell to like $7, and now we've seen it perform a little bit better. XYZY was down, it's down 50%. PLTY is up 24.83%. So yes, at one point it was up even higher than that. I'm not even sure it was up. It's hidden because there's so many, because there's 10 of these, but it was actually well up near 70% in the green in just price, and then it's fallen back down to 25% in the green. So overall, very interesting. Remember, if you're interested in income, that's what these funds produce. It's the goal behind them. If you're looking for the dividend returns, if you're more focused on growth, these funds are not for growth. PLTY probably got lucky with the growth aspect, as PLTR has done extremely well. But PLTY still hasn't even outperformed PLTR because that's not what these funds are focused on. Their focus is income, which is great for those that are interested. So what we're going to do now, we're going to look at my dividend tracking spreadsheet, and let's see what the NAV relates to the overall total return. Can some of these funds still be well in the green despite being down 40, 50%? Is it possible? Let's find out. Monthly dividends. We love it. We love getting paid. I like weekly dividends as well. Even better, you get them more often. Let's look at the performance of these dividend payouts. And what you'll see off the bat is that they are all over the place. They differ in wild amounts, not only from fund to fund, but even within the fund. Starting off with Coney, the highest dividend so far is $13.31 in May of 2025, and now it's paying out $5.99, less than half. The last couple dividends have not been holding up well, and that's because of the performance of the underlying. Whereas TSLY as well, even with Tesla running, is not paying out a lot more money, even down to the $3 range, which is a bit of a bummer. YMAG and YMAX, we've seen these. I've tracked these across a bunch of different series, and they've been doing average. They're both lower yielding, YMAG in particular, but the price is held up. We'll see which one is outperforming the other. AMZY, I think it is the lowest yielder of the group in the $2 to $3 range, with the 4 being the highest. Not great if you're looking for a high yield. Also not great if you're looking for total return, but we'll get to that. NVDY, I'm a huge fan of NVIDIA. We've seen this thing bounce all over with the dividends from almost $9 down to $4. Currently, one of the lowest dividends, but it did go into the 3s in the beginning of the year. MSTY, the heartbreaker for a lot of investors, myself included. I do still hold it, but it has been a disappointment as MSTR's price continues to fall, and the larger it gets, the lower the implied volatility, the less we make on dividends, and boom. So we've seen it fall from $11 in the month of May. May was a great month for volatility, that's for sure. All the way down below $7, now at $6.95. XYZY, another very poor performer, both in dividends and in overall return. Actually, I do think, which one has the lowest dividend so far? AMZY, no, YMAG had a couple really bad months actually. But as a monthly payer goes, AMZY with $2.29. I don't see one lower than that, which is really interesting. Never would have really guessed that. Amazon doesn't have a lot of implied volatility, but I thought the fund would be a little bit more popular. PLTY has been a monster. I will say that. It is currently, we've had $90 of dividends so far with $100 invested. And the price has done well. We saw it go up this year. So this one is probably what is keeping the account green. We'll find out shortly. And then we have ULTY, another very, very high yielding ETF that pays a roughly 80% distribution rate, which again is crazy, but it's been doing pretty well. It has fallen off recently in price, falling from that 640 to 550 range, which had a lot of people worried, but last I checked, it did bounce back a little bit. So total, the highest dividend payer we've had so far is actually MSTY with 68.43. I'm dead wrong. It is PLTY. Completely missed it. 89.66, not even close. 89.66 is our top performer. And then we have MSTY, and then after that we have ULTY, and then we have Coney, and then we're getting down into our losers, YMAG being low, but not even the lowest being AMZY, with XYZY right down there with it. Now I'm going to slide to the right, and we can see we've been getting some pretty consistent dividend payments with my $1,000 invested. We got $60, $60, $50, $45, $80 1 month of May. Everything was paying out in May and big. More money in August, $65 and down to $50 again. We paid $515.89. $515.89 so far in distributions from this account. But we're not positive by $500, mind you. So we have to see that total return and see which ones are winning and which ones are losing. We do have some challenges we need to address. DRIP is turned on with this account. So everything has been reinvesting back into it, which changes our spreadsheet. Now, if you are curious, we are launching the final version of this spreadsheet on Google Sheets instead of Excel because it's faster and it gets more of the Roundhill weekly pairs and it's easier to update. So I will be launching that sometime this week when the developer gets it back to me. It looks amazing and it's fully functional right now. I'm really excited. So this is for sale currently, but if you want the Google Sheets version, just wait. Also, if you already purchased this version, you'll be getting the Google Sheets version for free. It's the same thing. It's just a different format. So you're not having to pay twice because that would be super stupid. Anyways, drip is on. The money is here. We have watched it grow. We have watched the drip factor. We've seen a number of shares go up and average cost per share go down in most instances and for most of these. So I'm going to slide to the right and you're going to see one, the 52-week range, which is all red, and then our total return and total return percentage. Now, the important factor is our total return is not accurate on here. It's only accurate because we've been reinvesting, if that makes sense. So we put $100 into Coney and it might be valued at $110 right now, but because we kept reinvesting and that price kept going down, it's not really showcasing the dividends on top of it, if that makes sense. So this is with dividends reinvested. We are well into the red as we've seen these things fall over and over and over again. But this is also not factoring in dividend income. I hope that makes sense. So what we really have to look at, we're going to slide here and look at our cost basis versus market value. So for Coney, we bought $155 worth, meaning we made $55 in dividends, but it kept falling in price, meaning we're currently sitting at $96.44, which is not great. TSLY, same thing. We were actually doing pretty decently, but now we're down to 115 of that 143. So what we're looking at here, to make it make a lot more sense, I'm even going to zoom in for you guys. So what we should be looking at is this market value this started out as $100. If it's above 100, we're in the green. If it's below, we are in the red. So we can actually see a lot of these are in the green. Coney not being one of them. That one has been a worse performer, especially since Coinbase fell in price. We are green on TSLY by 15%, on YMAG by 15%, on YMAX by 14.5%. AMZY, we are barely in the green somehow, positive by just 4%. NVDY, even with AMZY paying out nothing in dividends, I guess the price just held up a little bit better. NVDY, we are positive by 20%. MSTY, we're positive by 3%. I cannot believe this thing is positive. We bought in at a good time because the beginning of the year, it was still really pumping, and that saved us. XYZY is the biggest loser, down 22+%, which is just crazy. Now, it is counteracted by PLTY, which is positive by 82% in the portfolio. We're up $82 with our dividends and minusing that NAV depletion over time. This is really, really impressive. I cannot believe PLTY has been able to perform this way. And then we have ULTY, which again, we were up to $165 in purchase price, and now we're down to $116, but we're still positive by that 16%-ish margin. So because of XYZY pulling the account down, we would be significantly more positive. Probably if you average these out, being closer to a 20% gain than a 16%. But all in all, we are still in the green. If I just avoided that one ETF, it'd be a lot more fun of a video. But that's just the way these YieldMax ETFs go. They have NAV erosion. You have to factor that in. You have to factor in when you're going to buy because that's a very, very important piece of the puzzle. And I want to say one thing really quickly. If you guys are interested in seeing my full portfolio, check my link down below for Blossom. I'll put it in the pinned comment. Check that out. It's a free investing app where I talk about all this stuff. And I like to interact with viewers, with everybody, with other investors. Give it a download, see if you like it. I call it like the Instagram of the financial world. You talk about dividends, investing, what you're thinking of with stocks, retirement, saving money, making money, all that good stuff. Check it out down below if you are interested and give me a follow on there. That would be absolutely amazing. But if not, still check it out and let me know what you think. Overall, a really fun series. I may not continue it anymore. Let me know if you guys really want me to continue. It just is becoming a little bit boring. I want to get ready for 2026. So this might be the final video. But again, let me know. I'll do what you guys vote for. I appreciate you guys so much. Thank you for all the love and support on all my last videos. You guys are absolutely amazing. Don't forget, if you're interested in this style of content, to like and subscribe. And before we jump off, if you liked this video, check these out on your screen right now. I guarantee you're going to like them, including my last video on the Roundhill weekly pay dividend ETFs that have been doing extremely well, and they're changing the way dividends are being paid. Check that out. Let me know what you think. And again, don't forget to spread some love today.